Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for Monday the 3rd of the 5th to Friday the 7th of the 5th 2021. Basically, we've modelled the economic calendar over that period for Tier 1 and Tier 2 data, Tier 1, T1, T2, Tier 1, T2, Tier 2, and we're looking at the various complexes. So there's 10 complexes we're looking at. So just make a start then. We've got January, February, March, April data, which are full months discrete data, and we've got the first trading week of May, which is the 3rd of the 5th to the 7th of the 5th, Monday to Friday. So let's make a start then. We'll start these as we write them up to save time. Anyway, here we go then. China then. Tier 1, -5, -5, +4, +7. And then we've got a neutral 0 for so far from May. +10, -4, +11, -2, +5 for the Tier 2. So you can see that we've got mixed China data, Tier 1 and Tier 2, slightly on the up, incrementally, slowly grinding up on the China data cycle for Tier 1 and Tier 2. The dollar then. Tier 1, -5, +1, -6, +10, -7. Tier 2, +24, +36, -8, +30, +15. So if you look at the Tier 1 for the dollar, we had a strong April, and it's deteriorated significantly so far in May. The Tier 2, however, has really been steaming, a little bit weak in March, but and then so we're very strong on the Tier 2. So we've got mixed dollar data. We'll talk about that in the analysis. So stop it there, don't go away, write the next two up. Well, welcome back. We've got the German data and the Euro data as the full block, 27 nations. So Tier 1, +4, +7, +2, -1, +3. Tier 2, +7, +11, +11, -5, 0. So Tier 1, we had the deterioration really neutral in April, and it's mildly positive in May, and we've got a strong situation of January to March, and a deterioration to neutral in the Tier 2. Eurozone as a whole then, -6, +13, -2, +3, -1. So fairly static to mixed. +5, +6, +14, +9, +2. So the Tier 2 is fairly positive and firing. Early days yet for May. So stop it there. See you in a minute. Right, we're off again. So we've got the yen, JPY, the pound, GBP. Yen then, Tier 1, 0, 0, -2, +2, 0. Pretty neutral, Tier 1. +17, +5, -6, +16, 0. So you've got fairly strong Jan to April Tier 2, and the neutral May. GBP then, Tier 1, +3, +8, 0, +5, 0, and +5, +11, -8, +21. So April was very strong for Tier 2 GBP, and +1. So we're nudging into positive, and we've had basically a positive overview for GBP data. So stop it there. Next two. Right, welcome back again. CAD, Canadian dollar, AUD, Australian dollar. CAD then, Tier 1, +8, -4, +6, +4, -2. Tier 2, -1, +7, +5, +8, -4. So the Tier 1 then, we've got slightly soft start to April, sorry, May, and the Tier 2 likewise, we've got a soft start to May again, -4 on the CAD. Right, AUD then, +2, +2, +6, -2, -2. So it's we're seeing a slight softening in the AUD data in the Tier 1. +6, +8, +15, strong March, plus 10 reasonable April, and plus 1 thinking about it in May. So we'll wrap this up in the analysis, but that's where we are. So last two coming up. Right, we're back. New Zealand dollar, NZD, CHF, Swiss, chuff. Right, New Zealand dollar then, plus 2, minus 4, plus 1, plus 2. So incrementally fairly neutral, but on the up slightly in New Zealand tier 1. Tier 2, minus 2, minus 7, plus 2, minus 5, plus 6. So we're seeing the start of an improvement in the New Zealand dollar. Talk about that in a bit. Right, tier 2. Swiss franc then 0, plus 2, 0, 0, 0. So neutral to mildly positive. Pretty much neutral. Tier 1. Minus 2, plus 11, minus 1, plus 8, plus 2. Starting to see improvement in the tier 2 on the Swiss franc. So we'll do the analysis now, so don't go away. Right, let's start the analysis then. So just to remind you then, and if you want more detail on this, look at the sister video, which is the flow video for the same period, the 3rd to the 7th. Basically, over last week we had a positive opposed driver in the dollar at minus 375. So we had front and back door flows, and the opposing positive flows were mainly going into the pound at plus 271, the euro at plus 180, and the yen was the negative rock at minus 76. So we had dollar weakness driving the market, and the pound was soaking up the positive flows, the euro was soaking up the positive flows, and the yen was slightly soft somewhere at minus 76. So let's have a look at the actual analysis then. So the China data cycle, if you look at the overall situation, it's neutral to positive really. So it's neutral to on the up. The dollar data cycle has been very strong. It's strong in the tier 2, but it's taken a dive in the tier 1. So we'll have to go, and it's significantly negative. So it's neutral really overall, because you've got this tier 1 negativity and tier 2 positivity really. The German data cycle is mildly positive, so it's neutral to positive, and the Euro data cycle is mildly positive as well, so it's neutral to positive here. So nothing to write home about there. The yen is neutral to positive as well, really. Looking at the overall figures, and the pound is pretty much on the up, but arguably it's gained neutral to positive at the moment. The CAD arguably is neutral to negative, but you've got to remember with the CAD that they're in lockdown at the moment in Canada, and this has skewed the figures. The AUD is pretty neutral. The tier 1 is minus 2 and the tier 2 is plus 1. The New Zealand dollar then looks like it's on the up, and we'll talk about that in a minute. And the Swiss is really neutral to positive. Right, so let's look at what's going on really in the overall macroeconomic picture then. So what do we know? We know that we've just had soft NFP. We've just had equities severely pumped, except the tech. The tech's lagging. The Dow and the S&P 500 are on the up. We've got commodities on the up, like copper, US steel, and oil's thinking about it. Gold is thinking about coming up. and yields US 10-year. If you look at the US 10-year, it's about half marks. It's 0.5 from the modelled floor and top, and the bund is about 0.28 from the floor. So and these are prices. This is the price graph. So basically, the price of US 10-year has come up higher, which means yields have come off relatively more than the bund. So the European yields are relatively stronger in our model terms than the US 10-year. So you're getting yield weakness coupled with dollar weakness, really. So we got dollar weakness, and if you look at the majors, then and we've got equities at all-time highs, apart from the tech, and we've got the yen transmission kicking in. We've got the yen's operating as a negative rock. We've got the yen, so we've got the yen transmission of the equities, keeping the yen low. So you got flows out of the dollar, structural flows out of the dollar, out of the yen via the equity transmission. So that leaves you with the pound and the euro in terms of the majors. So you've got negative flows out of those two. And so positive flows are going to be into the pound and the euro by default. The euro arguably is being helped by the yield differential there. The bund yields are relatively higher than the US 10 years in model terms. The euro is de facto the opposite really of the dollar in some respects. So it's getting a sort of tacit lift from dollar weakness, and the pound. Next week, really, we think the pound is really going to come into its own. So we're looking at strong pound GBP complex next week. And what have we got? Monday the 10th, we've got Australian retail sales. Tuesday, we've got China CPI. We've got Bank of England Bailey governor's speech on Tuesday. And then Wednesday, we've got GBP GDP. Now, they've already flagged that we've got the best growth in the last 70 years for GBP, the UK, if you like. So, and they've obviously had a good look at the figures ahead of what we're getting. So unless something very peculiar happens, these GBP GDP figures are going to be very strong. So it's likely that the pound is going to attract the bulk of these positive flows next week. What are we? We're short the dollar in terms of the euro, the pound, and the AUD, and we're short the New Zealand dollar against the euro, the pound, AUD, and the CAD. Now, the New Zealand dollar has had some strong data recently. It was the go-to favourite for commodity currencies. However, the New Zealand dollar is operating at about, it's now probably about 68%. It's not far off the top complex in terms of positioning. So the elbow room for the New Zealand dollar in terms of complex as a whole is quite limited. And if you look at it in terms of the pairs of the pound, the euro, the CAD and the AUD, that's where they've got the most elbow room. So looking to next week, you would think that the pound New Zealand dollar is going to be the star performer, and that tends to be one of the most volatile pairs of the lot as well. So if you want to look at individual pair volatilities, we've got a video on that, how volatile is my FX pair, worth a look. but take it from us. That's rocket fuel, pound New Zealand, and we're long the pound New Zealand. So hope that was useful. Try and catch the flow video, the sister video if you can. If not, see you Monday for the daily briefing. Thank you very much.